Hello everyone. Welcome to Finstruction Podcast. Here I, Akriti Bajaj, as your host will take you through the product building journey from the lens of product managers. Today, our guest speaker is Bharti Singhal, who's currently a senior product manager at Oyster. And prior to this, she's worked across various companies like Stashfin, EXL, etc. Over the years, she's worked extensively on credit products at different stages of 0 to 1 as well as 10 to 100. Hi, Bharti. So glad to have you today on the Construction Podcast.
Thank you, Akriti. Even I'm very glad to be here, and you have been doing an awesome job running this awesome series on fintech and trying to increase the awareness around the industry on the fintech products. So awesome, and kudos to you.
Thank you so much, Bharti. Really means a lot. So, for today's topic, the product that I'd like to discuss is risk optimization. And given that you worked in this space for quite some time, so I just wanted to get some understanding from you on how this product works, what are the backend systems, what kind of metrics do we track, and get some more deep dive into this product. I think before even
And
we get into the nitty gritty, I actually wanted to understand what exactly is risk optimization.
I mean, very nice question to start with. So, in credit, there are actually two very important metrics to track on the P&L, and they are the total amount of loans being underwritten and the overall NPAs that a business is having. So, if you draw these two metrics on a graph, having them on x axis and y axis, you'll actually find an optimized point. Going beyond that point, your NPAs will either increase or staying below that point will keep your system underutilized. So in both of the cases, it will cause having a bad P&Ls. So risk optimization, I would say like nothing but finding that optimal point where you are underwriting some sufficient amount of loans while keeping your NPAs at minimal.
Got it. Got it. I think you've described it really well in terms of, how this graph would look like and where that optimal point is. And as you mentioned, either of the states could lead to a problem, and that balance has to be very important in finding that optimal point. And this is where I actually had my next question. How do we make sure that, at the same time, we are scaling the product, increasing the user base, but keeping the risk low? Because I think at the end of the day, every company is striving for more revenue and for more users. That's what the aim of the product is. But as you mentioned, right, like if the risk is too high, then that could be an issue. So how do we strike the balance between the two?
Absolutely. So when actually we are underwriting and deciding to give credit to anyone, what we exactly evaluate is another further two things that we try to evaluate there. So we evaluate the capability to pay and the intent to. So when both of these factors are present for any customer, and present as in I'm saying that they meet the certain criteria, they are like more than average, the capability to pay and intent to pay as per your system standards is like more than average. So it's a low risk category wherein the uh, cheaper pricing becomes the attraction of the product, and here the you know attracting the larger number of people contributing the growth, but the attraction of the product comes is like cheaper pricing.
Okay.
But if any one of them, these factors, like any one of the factors goes missing, wherein like if you find capability to pay is lesser than the expectation of your system, or the intent to pay is lesser than the expectation of your system, then it becomes a high risk category. So to optimize the high risk category, what how we try to maintain the balances, we go and offer the high pricing. Now the growth driver, what becomes here is not, it cannot be the pricing for sure, but it comes from the underserved segment or the segment which is not being served. So this becomes your major growth driver for these kind of categories and segment. So this is how you try to maintain the balance for the two,
Got it. Got
the
it. So
growth and the attrition.
basically, low pricing as well as high pricing basis, what the intent and capability of the person is in terms of paying, as well as you mentioned the persona as well, the underserved segment. Got it. Got it. I also wanted to understand, what is the risk optimization and growth engine from the backend perspective? Like, how does it function? So that, we can get more insight into the product.
Correct, correct. So because just because in the last statement, what I've discussed is that one of our growth measure is to attract the unserved segment that comes with a higher risk route,
Yeah.
right? Now, to it's very important to have a very efficient underwriting system that can optimize both risk and growth for any fintech. So if I'm going to, talk about the very important components that builds the good underwriting engine, so I'll try to cover like five very important components that builds an effective and efficient underwriting engine. So I'll start with like first of them is data pipelines. So data pipelines is nothing but when you are trying to underwrite a customer, what we exactly do is we try to read various parameters, various data for a particular customer. And for reading these various data points, we connect with multiple data sources.
Okay.
So the job of the data pipelines is nothing but to bring the data from these data sources and dump it into the system. Now these data sources can be like anything. It can be like mm, the SMS data. It can be the bank account statements. So the data pipelines are one of the very important aspect in terms of being able to bring the data in the real time when you are underwriting, because nowadays like trend is going a lot real time underwriting.
Agreed.
So these data pipelines need to bring data in real time. At the same time, they should be able to bring like any kind of data, whether it be the PDFs, the images, or it be the bulky text messages data. So this is what your product should be fixing. A very heavy and good data pipelines is must for a good credit engine, underwriting engine system.
Okay.
So this is first. Then second, once these data pipelines have done their job, fetching and pulling the data from various data sources into the system, uh, these data pipelines actually push the data into the system in a raw format only. So the another job comes is for the data processors. So in your underwriting engine, other component that should be is the data processors, and the job of these data processors is nothing but to like process the data, whatever data pipelines have fetched, and put it into a readable format for the system. So based upon the requirement of your business, if you are underwriting an individual or if you are underwriting the businesses, so you decide number of parameters that you'll be pulling out of all of the data. So you will calculate number of features. It can range somewhere between 20 to 40.
Okay.
So these data processors do nothing but they like calculate the number of like certain features that you have required and put that into the system in a readable format so that further credit engine can consume it. So
Un-
then the third very important component comes into the picture is credit engine. And the job of credit engine is actually to evaluate the credit worthiness of a customer.
Okay.
So once this credit engine reads these 20 to 40 parameters, it evaluates if a customer is worthy enough of giving a credit or not. And if yes, then what is the amount that should be sanctioned for a particular customer? What should be the highest limit of amount being sanctioned? What should be the pricing? So this is the job of the credit engine performed after data pipelines and the data processes. Next comes into the picture is one of the very important components, and that's very popular as well among the entire fintech industry today. Is like the fraud engine, fraud as a service. A lot of
Agreed.
companies have been working on it. Yeah, so that's also like a very important factor, a very important component. So what exactly we do at fraud engine is we try to read a lot of parameters like duplicate devices being used for applying for credits, like one single device
Okay.
uh, is being used by one single customer. And like there are, I believe even found like, some cases with some of my uh, last companies which I was working with, like some people are like using 80 accounts from one single mobile phone.
Oh my God.
So these kind of usually go ahead and turn into a big frauds for the company. So it can cause you like big damages. So these are like very minor things which you can figure out and raise early in the system and can block it right then and there. So, like, there are also various cases wherein people try to use one single proof of identities or one single use of data across multiple accounts. So they'll try to use one single bank account history across multiple accounts. So some
Okay.
major red flags can also be there, like raised by various authorities like income taxes, the bureau authorities, checking for some political connections for the particular customer. So these are the kind of major checks run by the fraud engine, and accordingly you decide that if a particular customer goes for a hard rejection or a soft rejection. So if
Understood.
it's a hard rejection, which means you deny to the customer that you won't be able to pursue this application at this point of time. And if it's a soft, you actually go ahead and move this application for the manual teams, which can further dig down into the details and can
Understood.
accordingly decide if customer should be given the credit or not. So these covers like four important components of an underwriting engine, and then comes the fifth one, which is like manual underwriting process handling systems only.
Okay.
So at various stages, be it like credit engine or be it like fraud engine, and somewhere wherein like your system is not able to handle, like you feel like that you're uh, underwriting a customer which is like worthy of even much more than what is the limit of your system, then you put such processes on the manual underwriting. So there should be a particular component which should be able to handle all such cases in a very effective manner. Definitely the human intervention would be there, but
Okay.
every team should know that which particular kind of case belongs to the fraud review, or which particular kind of case belongs to the KYC review, or which
Okay.
particular case goes directly to the manual underwriters. So this is how this entire underwriting engine looks like and built like.
Great party. I think this was super detailed. I must say that you actually walked us through those five pillars in great length, and I think I have much more understanding about this entire underwriting now and what actually happens on the back end. Because I think as a customer, you do not know what's going on behind. You just know that it's taking time for you to get the credit limit. There will be some days, or you don't know what's going behind. But I think now actually we can all relate to why it takes time to assess whether the customer is credit worthy, what kind of documents are collected, processed, read. So all those things are
So until a system, like until a customer is hit on a manual process queue, all of it should happen actually in the real time only. So if there is
exactly.
something goes wrong, we need to like with the system process, regular
Yes,
process, then only it takes time. Otherwise, these days we are like designing the system wherein it should happen in real time. You get your
understood.
result out.
Yeah, and
Yeah.
I think that makes sense. With this digitization, everyone wants credit limit or the payments to function real time. So I can totally
Right.
imagine why there is a need to build these and data pipelines also in a real time fashion rather than, with a lag of a day or two. Perfect,
True.
perfect.
True.
I think my next question is more around what is the go-to market strategy of, these kind of products, just from, what's the process of going for that?
Hmm. So, when we evaluate the intent and capability of a customer, one very prominent way to evaluate the intent is evaluating the bureau score.
Okay.
But most of my unserved segment that actually most of the fintech industries are trying to cater, that comes from the no credit history. It's a new
Exactly.
to credit cat. Yeah. So NTC customers that we can like uh, so what we actually do, we can just simply devise a credit builder platform for them, credit builder product for them.
Okay.
How this product actually runs like is, ideally it should run in a manner where you take a small fixed deposit from the customer in advance and you sanction them small credit for around 6 months. This
Okay.
helps them build credit history because now you've given them the credit for 6 months. They'll be repaying you back for the 6 months, right? So, to be able to register on any credit history or on any bureau platform, it requires minimum 6 months of credit history. So it helps them building their credit history on any platform. And you also save yourself from kind of risk because you've already collected a fixed deposit in advance. So if anything goes wrong there, you just recover your debts from that particular FT. And
Okay.
this is how it functions. Yeah. So
Okay.
this is like one of the very uh, general, not I would say like one of the very prominent way wherein like you can increase your market size for such customers who are very new to credit.
Okay. Okay. So basically, you are giving them credit, a small credit line for few months, actually building their credit history using these, few months. And once you are confident about, okay, in these 6 months, they were able to repay and everything went fine, then you can start increasing their credit limit slowly.
Totally, totally. Yeah. So that is how actually you do you like keep tracking their repayment behavior, and this is how you know now their new intent to pay what they have
Yeah.
just like built, and you are able to evaluate them on those parameters. And of course, now you can slowly keep increasing their limits. Right.
This is pretty
And
interesting.
yeah. Sorry.
No, no, go ahead. Because actually, what I was trying to come from is that earlier I was of the opinion that we should always give high ticket size loans to people because that's what people are in need of and not the small ticket loans. And that ways, we will be able to reach more people. Uh, like even though it's lesser people, but NPAs would be, also low. But here I understand, even if the NPA is higher, but the risk that is being taken in totality, the amount, that's still lower. So, that ways you can cover more customers as well as, even if the NPA is higher, you can build their credit history and then move them to the high ticket size loan.
Correct. It's a kind of probability game that you are playing with like amount of people as
Exactly. So yeah, I think that's a pretty different perspective that I also gained few years back, and great to hear that today on this podcast as well. I think because we are talking about the go-to-market strategy, I also wanted to understand how do we market the product? Because what I've seen in the past is that generally all the banking products rely very heavy on cross-selling or upselling. So
absolutely true. Yeah.
yeah. So just wanted to get
So
your thoughts on the same.
correct. So in the like last statement only, we spoke about like one of the ways how we can bring the new to credit customers to the market and increase the market size, right?
Yeah.
So alternatively, there is one other way to do so that if there are like multiple products on your platform, you may be able to evaluate the capability and the intent of the customer from the usage of your other products that they are like utilizing from your platform, right?
Okay.
So, for example, if you as a fintech platform are having some banking services like a savings account or the current account on your platform, your customers' average balances that they maintain in their account. You know their average withdrawals that they do, their average incomes, and you can reach them out these customers directly for the products like credit understanding their needs better, right? And just like assume for a few more products like if you have some other products like payments or buy now pay later BNPL products on your platform which are being used by your customers who are maybe some businesses or the individuals or like being used by your customers other merchants etc. So this is how you know their average turnover of the like customer and average income, the average cash flows that they are able to maintain. So the overall potential of the customer, you are able to evaluate based upon the usage of the other product. And then you simply can reach out and cross sell to these customers knowing the capabilities and intent. Again,
Got
okay,
it.
so like just one single measure for me is capability and intent. And this is what I'll try to evaluate from the different uses on the different product for a particular customer. So it's like one of the very effective ways and mechanisms to market the product is cross sell. Apart from this, what these are like, there are some other instant cash product mechanism also you can introduce, wherein you can sanction some very small amount of credit at zero rate of interest for a small amount of time, like 30 days or 45 days or something. And you just
Okay.
watch the behavior of the customer and can accordingly sanction higher amount of credit slowly. So that also becomes part of cross selling kind of or attracting the larger market base. right?
Understood. Understood. Yeah, I think that's absolutely correct, in terms of innovating with the product itself and doing it for a lesser tenure that can also help build the credit history and understand the customer behavior. And as you mentioned earlier, that, maybe you can increase the amount and tenure once you're confident about their repayment behavior. Got it. Got it.
Exactly.
Hey, I think one last question that I had was what kind of metrics do you track to understand the user behavior? And, feel free to take the user as an individual or business here as per your convenience. But yeah, I think the
Right,
metrics
right.
would be really interesting to understand here.
Yeah. So, for business level, I would say is one of the like most important metrics to track is the NPS only, and that defines their entire PNLs. But like I can even bring it down to the product level and the user level as well. So the different metrics that you can track on the product level and the different metrics you can track on the user behavior level as well.
Okay.
So on the product side, what we can like we usually track is the number of loans being underwritten month on month. So it really defines the efficiency of your system, how you've been improvising in terms of underwriting, so that you are able to keep your NPS low. So any system, like once you start collecting more data after underwriting more customers, your models of your system should become more efficient, more intelligent, and should be able to
Yeah.
effectively write under more amount of loans. So this is a very important parameter and metric to track in the system, that how many number of loans you are underwriting month on month basis,
Okay.
and what the growth that you are registering over there. uh, Second, I think, yes, of course, along with it, the amount being underwritten. So it should not be the case that you have just like, a number of loans got increased because you've been underwriting very lot of small ticket size loans, but it should also be like you are underwriting the sufficient amount of loans as well. It should be average ticket size should look like good enough only. So that's also one of the very important metric to track, that the total amount being underwritten month on month basis should also go high in order to be able to utilize your system effectively.
Understood.
I think third metric I would say should be the percentage of loans coming on manual process also becomes very important, but it widely differs organization to organization basis, that how they want to lay down their manual processing systems. So if some of the organizations are like they are into underwriting the very high ticket size loans, then of course their manual processes would look like too much clumsy, and it will be like might be they are underwriting 90% of the loans through the manual process. But of course, the some small fintech industries which are like underwriting a small ticket size product, like small ticket size loan of some 10,000 or something. So their manual process should come down regressively. Uh, it like it should just keep decreasing, because you are not underwriting a big ticket size loan. So it should just keep decreasing. Your manual intervention should come down, so that your OPEX cost should also come down. So eventually you would be able to mark some add on to the PNLs.
Got it.
So that's another important metric, I would say. For this, of course, yeah. So DPDs, how many DPDs on the product level are you registering? So when the underwriting systems are built, so a lot of modeling would be there, which would be taking the data, how your current underwritings have been performing, and based on that you always consistently have to keep improving, that your DPDs in the system on the loan level and the user level should go down. So DPDs is nothing but like the date past due loans, so loans which are overdue. So that
Got it.
should also be one of the important metrics to track, that how your system has been doing and what is the accuracy and efficiency of a particular underwriting engine.
Understood.
So these are the product level metrics that are good to track in any system. Apart from this, I think on the user level, you can definitely track the repayment behavior once you have underwritten the customer. So if they have not been paying on time, and if there is any delay in every EMI or every second EMI, then based upon this, repayment behavior, you can also decide if you want to again underwrite this customer and can see if you should freeze the sanction limits or decrease the limit by a certain percentage.
Okay.
So this is another way, like another. This is actually I'm defining more of an action item after you have just tracked that this particular user is not performing well on the repayment behavior. So there comes a concept of like continuous underwriting as well that I can talk about. So how we usually underwrite the system is one at the time of giving the credits, right? So
Agree.
that the being used throughout the industry. But another concept is called continuous underwriting. I think, as per my knowledge, India hasn't adopted for this mechanism yet, but it solves a huge use case for the line of credit products where you give the pre-sanction limit to the user. So one of the major reasons why probably that RBI has been bringing tough guidelines on fintechs issuing the credit lines
Okay.
today,
Yeah.
this can solve one of those important parameters wherein like what you do in the continuous underwriting is once you have underwritten a customer, what you usually do that you can define a certain frequency in your system, whether it can be on monthly basis or it can be on quarterly basis.
Okay.
And whatever the process you defined for them earlier, you can simply track all of those features and metrics again, and you can simply evaluate if they come up with the same category, same credit worthiness, wherein the amount sanction for them should remain same, or it should decrease by a certain amount, or it can be even increased by a certain amount, or if the pricing should be changed for them. So these kind of decisions can definitely be taken based on continuous underwriting. So out of India, there are like a lot of provisions wherein once you have connected through one single data source, whether it be through the government or the other sources,
Yeah.
like their income tax data or it can be bank account data. So you can keep pulling those data once you have built the connection and you can continuously keep underwriting. So this solves like the big, huge case for the line of credit products in India, at least. And I believe we go in that direction further along with like as
No,
out
no,
of India.
this
Yeah.
is a very different, lens to underwriting because, as you rightly mentioned, right, everyone has just heard of one-time underwriting whenever the customer is approaching for the loan, but continuous underwriting can actually solve for a lot of things. And I think your model will also get better trained using more and more data and understanding about the behavior, building on their behavior. And it does not just end, okay, I've given the credit and now I just need to collect the loan and the story ends there. So I think, yeah,
Absolutely.
this is super interesting.
I solves the use case for the RBI as well, as they've been worried about how fintechs have been like giving a lot of pre-approved lines, which may cause like a lot of bad debts later. So yeah.
Absolutely. No, no. I think that's a great. I think I can put this as a disclaimer that you get to know something interesting to solve for this problem. Great, great. Thank you so much, Bharti. This was super amazing. I think I just had one last question, which is not related to the topic, but in general, if you have any one piece of advice for aspiring or current product manager, that would be great.
Yeah, okay. So I think for all the aspiring people who want to get into the fintech, one thing for sure that I would like recommend to everyone is start looking at the product from the lens of data a lot. And whenever you are getting an opportunity to get in, like work on any fintech product, try to fix the data pipelines very first because they are very, very crucial and a very, very important component in your entire product. So if you're trying to solve any problem in the fintech product, just like make sure that this is what is fixed and then only try to proceed for anything else into the system. Otherwise, you'll not be able to solve further.
No, absolutely. I think this is a gem of an advice and not just extends to fintech. I think every product, because today every product, their core mine is the data. And if your data is correct, I think you can solve for a lot of things in the future, which you might not have, uh, you know, expected to do, at least in the right now, current scenario. But you can do a lot of things with that kind of data in the future and play around with it.
Absolutely. Absolutely. And to be very honest, Akriti, I've heard like a lot of people, a lot of companies keep talking about like we need to just fix data and all of that. But like when it comes to the practicality, people are least bothered about it, and they don't want to, like, they just want to get away with the problem because it's a complicated problem to solve. But it's very, very important to fix the data pipelines. Otherwise, it doesn't take the product anywhere. So
Agreed.
yeah,
Agreed. But thank you so much, Bharti. This was super exciting. Thanks a lot for coming over and speaking on this podcast. Thank you so
sure,
much.
sure. Thank, thank you, Akriti. All the very best with your series.
Thank you.